So Catherine D. Wood and her team at ARK Invest is the talk of the town. And for good reason. Their actively managed ETFs were the best performing funds in 2020. They've had blowout year after year, and they are seeing record inflows from investors. So I'm sure many of you are wondering, well, just which one of them should I go for? Should I go for ARKK, G, F, W, K, print? Well, in this video, I'll give you my 2 cents. Now, what they all have in common is that they offer exposure to high growth companies in disruptive industries and technologies. They are fairly concentrated at around between 30 to 55 stocks, and no stock can exceed 10% of the fund's total value, just to keep the risk in check. And in order to make a living off of this, and these are based on extensive research and deep dives from the whole company, they charge 0.75% expense ratio across the board, meaning that these are quite expensive ETFs, but not as expensive as traditional index funds, for example. So first up is ARKK. Now this is the flagship of ARK Invest, and it holds all the favorite companies of Catherine's. So you got holdings like Tesla, Square, Roku, and Spotify. And I think this will be the go-to ETF for most people if you just simply believe in Catherine's stock picking. And it is overweight in tech, so in streaming, social media, e-commerce, and so on. So this is kind of a tech ETF, I guess. And although being the flagship ETF, it actually ranks second to last in terms of average and median market cap. So the companies are still quite small, other than Tesla and Square, of course. So there's still plenty of upside. Now, I think this would be my to-go-to ETF out of the bunch, because you get all of her favorite companies. So I just believe in Catherine, so I would just go with this one. You get a little bit of everything, but the companies are still quite small, so there's still a lot of potential upside, and the volatility and upside potential is still way higher than something like the S&P 500. Onto ARKW, this is their tech ETF, so probably the go-to one for most tech investors. The list is quite similar to ARKK, but notable differences are Facebook, Netflix, and even the Grayscale Bitcoin Trust making the top 10. The number one holding is still Tesla. Some might wonder why, but ARK considers Tesla a tech company with their connected fleets and AI and self-driving capabilities. Now, the key areas for this ETF is apparently cloud computing, e-commerce, blockchain, big data, and social platforms. And I think these are prime industries to be invested in these days, so I definitely like that. But I am struggling a little bit with the holdings, and I'm missing certain companies like MongoDB, Amazon, Microsoft, Alibaba, Salesforce, and maybe CrowdStrike in there. So overall, I'm not a big fan of this ETF. I'm missing a lot of cloud computing and AI plays in here. And although it holds some of my favorite companies like Tesla, Square, and Netflix, I feel like they just muddy the water, and I'm not sure which direction this ETF is going in, since I don't necessarily consider Tesla, Square, and Netflix to be the same. You can call them tech companies, but tech can be a lot of different things. Besides, I'm not a fan, at least I actually really dislike social media companies like Facebook, Pinterest, Snap, or Twitter. So I'd probably stay away from this, but again, probably your go-to if you're a tech investor. Now on to the letter Q. Now this one actually sticks out a little bit with some 3D companies in there, a defense play, space exploration, and even John Deere making the list. So some key areas of interest for this one is autonomy, robotics, 3D printing, energy storage, and space exploration. And some notable new additions are companies like Alphabet, we got AeroVironment, Materialize, Virgin Galactic, Caterpillar, and even BYD. So here you're finally able to shed some of the top holdings that follows Catherine around, apart from Tesla, but I actually think Tesla fits into this ETF because it's autonomy, it's energy storage, robotics, and actually everything. Now, in terms of performance and potential upside, this one is actually quite safe. It ranks the second highest in terms of median market cap and average market cap. And that's probably thanks to huge companies like Caterpillar, Alphabet, John Deere, Baidu, and JD.com. So because of these giants, you're probably going to see some more steady returns. Now, this one actually gets me quite excited because you have some Chinese companies in there. You have some industrial manufacturing automation, which I think is a huge tailwind for these companies, space exploration, 3D printing, a lot of interesting plays, and some companies that you don't necessarily see a lot of headlines about, but this one sticks out, and I definitely like this better than ARKW, for example. Now to question of the day, it comes from Hardik Parikh. You guys don't have the easiest names, I'm sorry if I butcher them. Amazing channel, would you be able to do a video on the tools you use to screen stocks and reports / website you use to grab information outside the SEC filings? So I'm not much of a numbers guy, and I don't necessarily look into all the numbers for a company before I invest. I look at the company in general, the management, the pace of innovation, and the potential upside, and whether they're taking part in a big trend or not. As I've said earlier, I think investing is an art, not a science. And if it was as easy as just going to a website and looking at the numbers and figuring out whether you should invest, everyone would be making it rich. And no, I don't think you need any numbers outside the SEC filings. Not a big fan of numbers, so there you go. On to the letter F. Now this one is another interesting one, and the top 10 list again has some fresh additions like Mercado Libre, Sea Limited, Adyen, Meituan, and International Exchange, and these are involved in the fund's key areas like transactional technology, a blockchain, risk transformation, frictionless funding, and peer-to-peer payments. So basically people paying each other for stuff and just helping them out with that. Now in terms of performance and upside potential, I think this is at the higher end because of its international exposure to Southeast Asia, South America, and Europe. And although it has the highest average and median market cap, I think that pretty much comes down to big holdings like Amazon, PayPal, Tencent, and Alibaba. So again, financial tech I think is a big trend. I like the space. I like some of the more interesting holdings, like the international ones, because the move to e-commerce and cashless is still emerging outside of the US and Europe. So I think these are some good picks, and still I like it more than ARKW, for example. And the only thing I'm really missing in this ETF would be a grayscale Bitcoin trust. I think this is an obvious holding to have here, and I think Catherine had it in her tech ETF, so I'm not sure why it's not included here, so I would like to see that addition. Now on to G, the crazy one of the bunch. And if you don't understand anything of what I'm about to say, or you haven't heard of a single one of these companies, you're not alone. And so this fund invests in, and I quote from ARK's websites, companies that are focused on and expected to substantially benefit from extending and enhancing the quality of human and other life by incorporating technology and scientific developments and advancements in genomics into their business. So some of the companies you might have heard of are Nvidia, Teladoc, Novartis, CRISPR Therapeutics, and a bit further down the list, Alphabet is actually there. Now, unsurprisingly, I think this offers the most risk. It has the smallest companies, it's in a small niche, and the exponential potential, if these technologies turns out to work, is obviously huge. I mean, developing and altering and predicting human genomic patterns will be the biggest biological breakthrough in our history. And if these quite small companies are able to make that breakthrough, there's obviously going to be huge amounts of money flowing to them. Now, I personally know nothing about genomics. I know nothing about these companies, so I would stay away personally. But if you do, or you simply want to take a crazy bet, I think this is a good option for you. And after all, it is the industry Catherine is the most bullish on going forwards. So this is definitely high risk, high reward, but it has done well so far. And I have no doubt that there's a good chance that this will be the top performer out of all the funds. Now onto PRNT, this is going to be our last one. Now, although it's not an active ETF, they actually say it's an index fund, I thought I just had to include it because hey, it's 3D printing, you make stuff with stuff. And if you don't quite know what sort of companies they're invested in, I'm quoting from the website here. So they're invested in companies in 3D printing hardware, computer aided design, 3D printing simulation, printing centers, scanning, measurement, and 3D printing materials. So everything you need for making stuff from stuff. I just love the idea of 3D printing. And some of the companies you might have heard of if you've been hearing about ARK Invest before are 3D Systems, Stratasys, Proto Labs, and even Microsoft and HP. Now this one sticks out because it's 3D printing and it has actually struggled returning any money to shareholders ever since its inception, and it actually returned nothing from like 2016 to mid 2020, but then it really boomed. So this is an example of how investing in disruptive technologies isn't for everyone. You might have to wait a long time before the technology takes off, but when it does, it can take off big. So I think some of the risk here is that 3D printing is a technology that's been around for a while, but it hasn't quite proven itself. So the risk is not the companies going up or down too much. I think the risk is the technology simply not taking off, because the idea of making stuff from stuff is great, but if you have a printer that can make a bunch of different things, how can it make each thing better than like a whole factory that is designed to make that one thing? So it's used in a lot of complicated things, engine parts for aerospace, for example, but this space, still remains to be seen the validity of it. So this is an uncompromising ETF investing in one niche, and it gives you exactly what you're looking for: 3D printing companies. So if you believe in the industry, this is actually your only ETF for that. Now, despite its struggle with returns and not being talked about as much as the others, again, if this is your industry, this is your ETF. Now, risk-wise, I think it's anyone's guess. If you look at the performance, it's been something completely different than the others. So here, I think you can expect a lot of ups and downs. So risk-wise, I would put it towards the top. So out of the bunch, I'd probably go with ARKK, no surprises here. It's just Catherine's favorite companies, and they're from all sorts of industries and all sorts of sizes. And I believe in Catherine. That's after all the only reason I would invest, so this is the one I would go with. They are uncompromising, offers a very good risk-reward balance, and I think there's a very high likelihood of beating the S&P 500 with this. And all of them have since inception, apart from PRNT, I guess. Being the stock picker I am though, I would rather pick out 1, 2 or 3 of the top holdings and just go with them. That's what I'm kind of doing. I already have Tesla, Amazon, and I'm looking into Square, so that would be my strategy for this. Let me know which ones you're looking at or already holding. If you enjoy this video, please consider subscribing. I've noticed that about 73% of you are not subscribed. I don't know why, so if you enjoy my content and you want more, I suggest subscribing. Give the video a thumbs up. Thanks for watching. Hope I'll see you in my next one, and as always, take care.